BHP Billiton reported annual profit that fell nearly 30% on lower commodity prices, a decline that occurred even as the company worked to save nearly $3 billion in cost-cutting over the year. Despite cost-cutting measures and record production, BHP said slower growth in China and other emerging markets dragged down prices for copper, coal, and iron ore. However, BHP said it expects that demand will be driven back up by reduced investment in new mines and believes in China's long-term growth prospects. In other news, newly merged commodities and mining entity Glencore Xstrata said it took a $7.7 billion hit on Xstrata's mining assets. The amount was worse than the $7 billion analysts had expected. At the same time, the company reported a nearly $9 billion loss for the first half, compared to a $2.3 billion profit last year. Glencore said the write-down reflected the broader negative mining industry environment and that it was also hurt by weaker commodities prices. Lastly, struggling department store chain Penney reported worse than expected results for the second quarter, citing challenges in recovering from its failed turnaround attempt under former CEO Ron Johnson. Penney reported a loss of $586 million, or $2.66 per share, worse than analyst expectations for a loss of $1.06 per share. On a bright note, Penney said its same-store sales slightly improved from the first quarter of this year. The company said it expects sales to continue to grow for the remainder of 2013. In New York, I'm Brittany Umar for The Street.